Hi, welcome to Coffee with Katie. Coffee with Katie is an initiative that I started to help simplify the financial conversation. I'm Katie Brown. I'm a certified financial planner and a chartered financial consultant, and I've had the privilege of serving families for nearly 20 years navigate their financial landscape. So this month I'm talking about insurance, specifically life insurance right now. In my last video, I went over 4 of the primary reasons that I see families incorporating life insurance into their financial plan. Number 1, for income replacement. Number 2, for liquidity purposes. Number 3, to offset potential estate taxes. And number 4, for legacy purposes, to ensure that there's something there for either your children or heirs or maybe your favorite charity. Today, I want to talk about the different types of life insurance and some things that may influence the cost of life insurance for you or your spouse. I'm going to break the types into 2 broad categories: term insurance and permanent insurance. Term insurance is coverage that you can purchase for a specified period of time. So that period of time may be 10 years, 20 years, 30 years. You can get it for other years too, but those are the most common ones that I see. Permanent insurance is insurance that is in place for your lifetime. Now, if we go back to term, the reasons that you might want to pursue a term policy is if you have a risk that you're trying to address that is going to occur over a specific period of time. So if you are planning on working for another 20 years and retiring in 20 years, and you want to make sure that your income stream is protected for the family, then you may purchase a 20-year term insurance policy and kind of match that up. Or if you have debt that you want to make sure is covered, if you have 20 years left in your mortgage, then once again, a 20-year term policy may make sense if you want to make sure there's liquidity to help cover that debt. On the permanent side, the reasons why you may want to pursue permanent insurance is if you don't know the period of time necessarily to be covered, but you want to make sure something is there at the end. So once again, if you're trying to cover against estate taxes down the road, well, you want to make sure that insurance is in place, but you don't know when that's going to be, so you want to make sure it's there to the end of your life. Or for legacy purposes, to ensure that there's insurance to pay out at the end of your life. You might have a pension that will continue throughout retirement, but when you pass away, the amount will either reduce or go away. And so you want to make sure there's insurance in place to continue an income stream for your spouse throughout their retirement as well. So those are some reasons for permanent insurance. A couple of the big differences between them, outside of the time frame, term insurance is much less expensive than permanent insurance. Because term insurance, when you pay a premium, that premium is going to just pay the cost of the current insurance right now. You're not building an asset. Whereas in permanent insurance, you're actually building an asset within that policy. And oftentimes they try to keep the premium level over your lifetime. But the way that that works is that the premium in the earlier years is actually greater than the cost of insurance. And so that excess amount goes into what's called the cash value bucket. And that cash value will continue to grow through the beginning part of the policy years. So cash value in a universal life policy accumulates, and then is available to help offset the latter years when the insurance cost is higher. So you don't necessarily have to put more money in. Money's already there to help support it. And so that cash value kind of goes like this. There's a little bit of an arc throughout the term of the policy. In a whole life policy, that cash value is often targeted to be the same as the death benefit at a specified age, let's say 100. So if you have $1 million insurance policy, the cash value will continue to build to get to $1 million also at your age 100. And then it's an asset then that flows to the family as well. And so for that reason, because the whole life policy accumulates a lot more cash value typically than a universal life policy, the whole life policies are going to be even more expensive. So when we look at the cost difference between a term policy and permanent coverage, Permanent coverage is on average 5 to 15 times as expensive as a term policy, according to Policy Genius. But like I said, for the stated reasons of you're building an asset, you have access to that cash value, it's a tax-free bucket. There are a lot of advantages to it as long as it fits well into your financial plan. Other things that influence the cost of insurance. The first is the age of the insured. So the younger you are, the less likely that you're going to pass away, the cheaper the insurance is. As you get older, that insurance cost increases every single year. The second item that influences the cost is your health rating. The insurance companies will take a look at your medical records, and they'll often give you a physical, and they'll review your status, and they'll assign a health rating to you. The health ratings that we often see are standard, preferred, preferred plus, for instance. And then there are a number of other ratings as well. And the typical increase from a standard rating to a preferred rating, for instance, might be as much as 30%. So the greater the health, the lower the cost is how that works. And I hate to break this to you, and I apologize, but if anybody's a smoker, that also makes the cost 2 to 3 times as expensive. So it gets to be quite costly there as well. So those are the two main types of insurance: term insurance, permanent coverage, and some items that influence the cost. I hope you found this helpful, and if you have any questions for me or would like to further discuss this or any other topics, I would love to hear from you. Please feel free to reach out to me at kbrown@mortonbrownfw.com.